Today we're going to talk about the T account and if there's an imbalance on the account. And this really will come to the conclusion pretty much either at the end of the interview, pretty much after the auditor's made all their adjustments. And if there's an imbalance on this T account, we used to call it a cash T. And but how did it even get to this point? And what's really important is this video does contain a lot of information, but we're going to keep it short and sweet. And I provide a lot of some snapshots at the end of where you can go in the Internal Revenue manual. It'll actually shows the snapshot from the ERM on the information. But when the examiner, before they even send out the initial contact letter, they got to do a pre-audit. They got to conduct some research, and it's significant, really. I mean, some of the, the scope of what they covers, it's just like, and everything I'm mentioning here is not all inclusive. And so, like one of the first items is they have minimum requirements for the examination of income. Okay, and these are just what I give you is it provides a short summary of the items that they'll check in the pre-audit phase. If it's a revenue agent, well, I mean, also, a tax compliance officer, they're going to look at this next item is gross receipts or gross income, just all the items that are considered gross income or gross receipts. Business returns, it basically, you look at this part of the ERM, it just shows how an entity is going to be examined. The next section is program and scope of the objectives. It just describes the basic responsibilities related to required filing checks. So basically, the examiner has to go in and just kind of check to see if you filed any other type of returns or anything like that, just basic stuff that they have to required to do. And then the last item I threw in there was their preliminary research, which is basically on, the tax law, the Internal Revenue Code, any tax regs, or anything associated with the issue. And they're also going to check to see if you've had they're going to do a review of any prior audits. And so they take all this information that they collected and they create this cash T, or a T account. And they're going to gather a lot of this information from your tax return, tax returns. Some of they're going to grab, off their online where they have incomes reported electronically and stuff. They're just going to populate this information onto the T account, and they're going to take. So you get you got your sources, which is your income, and then there'll be the side for your uses, all your expenses, and it's going to come up with: are you in balance? I mean, does your income exceed your expenses, or do your expenses exceed your income? And I mean, use that if you're getting audited, and let's say in the issue, let's say the issue is office expenses, and you got $30,000 office expense that just sticks out like a sore thumb, and you're in balance, your expenses are basically exceed your income by $30,000. Well, that could be the whole thing. And so that's when the examiner gets done and they make their adjustment on the tax return. If it corrects the imbalance, because they'll go back and they'll readjust the T account, well, that answers the question. That's it. We're all done here. But when they get to the end here and they've made all their adjustments, well, they're going to be asking us like, hey, where did you get this? I mean, explain this imbalance. And another interesting thing is, so I actually I recreated the cash T. I make a snapshot. I throw it at the end. But I also recreated at the time when I was working there, they were using estimated personal living expenses. And so I have a snapshot of that. I mean, it's a lot of information. And they also have estimated personal living expenses from the Bureau of Labor and Statistics. So they're actually just, what they'll do is you'll see the form. It's a blank. All these are blank. But you see they'll check a box, and one will be, like, what's your living situation? I mean, how many people live in the household, and how many people are, earning, have a job, W2 wages. Do you have a house you rent? Um, how many people are in the household, and what part of the country you're from. They check those blocks, and magically, while they have it all populated, they grab from the Bureau of Labor Statistics, all these expenses come in, and it's just like, oh, and you'll see there's a section there where they can actually check a block and omit it, and because it'll populate vacations and life insurance, and a lot of these people don't have these things, and you'll have to go in and readjust it. So all these things are considered into the T account. So, and that's what I wanted. I wanted to show you this. Just take a look at it. Especially if you're being audited, just to get an idea of what they're looking at here. It can be mind-boggling when you think about it. But it's all going to come down to, if they make the adjustment on the return and it's corrected, there's no imbalance on the cash sheet, you're good to go. But let's say there's an imbalance. Let's say expenses exceed the income by $50,000. The auditor's going to say, "Can you explain this? How are you paying these expenses? Because the money had to come from somewhere." And by then they've already looked at everything else, and then you'll say, "Oh, I got a loan from a family member. And you hadn't disclosed that previously." Well, okay, that's fine. And but the thing is you have to prove it. If you come up with an answer like that, they're going to say, "Well, you have to show me, and who's the family member," and they're going to have to show the funds and how they withdrew it, whether they, well, obviously they, if they transferred into another account, or they, paid you cash or whatever, and that'll be that. And so that's pretty much it. All that, I put snapshots at the end. I pretty much wanted to show you that. And so the one last thing I'm going to mention in this video is, as you're going through this process, at any time that you feel like you're overwhelmed, by all means, say you get representation. Just do it. If you can't handle it, most of the stuff you should be able to handle. But if you get to a point where it's just overwhelming, go out and find yourself a certified public accountant, an attorney that's well versed in tax law, or an enrolled agent. Enrolled agents are very good, because that's what they do. That's all they do. That's the whole thing they've got certified for, is to help people with tax situations and stuff, and complete tax returns. So that's pretty much all I have. Thank you for watching.